Morning, everybody. Happy New Year. I don't know if you can still say that at the end of January, but it feels like I should still. So we're now in our new offices. Some of it's quite nicely set out, like this bit. Some of it through there, we haven't got the blinds up and things. So I will do a walkthrough tour as and when everything's properly sorted. Hopefully it'll all finish this weekend. The painters finish up. So a lot of you are doing tax returns or tax return submissions for the 31st of January. And probably a little bit aware of what tax bills might look like. It is a great time now before the end of April to have a look at tax. I will be contacting those of you that are self-employed particularly, and just to do ISAs. People that have worked with us for a while know that we try and do the ISAs are at the beginning of April or similar, in order that you get the whole year tax free rather than just the last few weeks. But what I wanted to have a quick chat about is actually the state of the market and give you a quick update on where you all might be. So this is a plot of the two main portfolios that we have. So the red line, you can see the plummet off the edge in March when Corona came out, and then the subsequent return. And actually over the year, the balanced portfolios have come up quite well. They are sitting at a 2.25% net gain over the year. So I'm really pleased with that given what's gone on. The blue line is the Prudential funds. So those of you who've got a Prudential bond, for example, there are three funds that operate very similarly. And for simplest sake, this is just one of the lines. So you can see in March that there was the Pru fund operates as smoothing. So it doesn't jump up and down the same way that an ordinary portfolio does. It makes price adjustments. So you can see the price adjustment in March where it kind of dropped away. They're very aware that normally there's quite a sharp bounce back from a drop like that. So they tend to do it in steps. There was only the one step in March, but it was 16%, which is quite a chunky price drop. Market itself went down about 25, so it's not bad. But you can see how it's just smoothed out and allowed the rest of the growth to catch up with it. They've put in two subsequent price adjustments back up, one of 5% and one of 6%. So there's still another 5 or 6% step up. And you can see that the disparity between these lines, they tend to run very, very similarly parallel to each other in terms of performance, because they're invested in very similar portfolio mix. So there's this disparity here, which makes me think the Pru will probably step up again fairly shortly. There'll be a 5-6% jump up. Now, I know I've spoken to a couple of you that are contemplating investing about this, and I think this is a really opportune moment. The pension fund has already had its price step up, so this investment fund will do it fairly shortly, she says boldly. My crystal ball says it will do it shortly. So I just wanted to have a quick catch up that, end of the tax year planning, primary planning is investment account to ISAs. Those that I know about will be contacting you in the next few days, and we will just organise those for you. And then any pension top-ups or pension contributions you think could be useful. So, sorry, I've waffled on quite a long time, and enough is enough. Happy New Year, happy 2021. Here's hoping it looks a lot better than the end of last year, and I will talk to you all soon. Right, thanks, bye.